Now, for more on gold, let's bring in Unlimited CEO and CIO Bob Elliott, who has been bullish on gold for a long time, as viewers of this program know, but turning cautious this week and in recent days. And BMO Private Wealth Chief Market Strategist Carol Schleif, who looks at other ways to trade the metals. Guys, welcome. Bob, say it ain't so. You cautious on gold? What does cautious mean? You selling gold?
Well, I think now is the time to start to pare back and take those profits. John, you and I have been talking about gold since it was under 2,000, and it's been a heck of a run. And I think the thing that gives me some pause here is starting to see a shift in that market, where before we had strong demand out of Asia and particularly global central banks, and the West had yet to catch up. What we're seeing in the last couple of weeks is some of the strongest buying in the U.S., particularly through ETFs and other mechanisms, that we've ever seen in gold. And that's the thing that's driving the surge, just at a time when we're seeing global central banks actually pare back their buying and pretty weak demand in the East relative to the normal levels we'd expect at this time of year. And so that composition's a little more concerning when you think about the forward-looking picture for gold. So look, if you're 100% in the money on this trade over the last year or two, it's time to take a little bit of profits.
Okay. Carol, can gold move down the way it moved up? I tend to think of it as moving differently from other commodities.
It does tend to move differently, but we've seen in prior periods when investors have piled into it, especially towards the end, and a lot of the reason you've seen some of that final push, it has been to sort of hedge against what's going on and the gains made elsewhere and the potential volatility. And we've definitely seen in prior periods when that's happened, it can reverse course pretty quickly too. So, I mean, owning gold is a different part of a portfolio because it's not you're not earning an income on it. It's definitely there, almost like a psychological hedge, if you will, in individual portfolios, because there's a cost of carry if you're owning the actual bars. And so there's a lot of other factors that consider in that, in terms of why you'd want to own it or why you'd want to trim back on some of the exposure.
But Carol, I thought that's what crypto was for. What does it say perhaps about that asset class that gold is having such shine lately?
Well, I think a piece of it is initially people are still trying to figure out what crypto is. Is it a currency? Is it a hedge? And a lot of people were making it synonymous with gold. But when you look at the chart and the way it's performed, and particularly look at the way it performed after the market closed last week and through the weekend and through this week, it's not performing that hedge yet. So is it speculation? Is it an asset class? Is it currency? People are still trying to figure that out. And sooner or later we'll come to it'll settle into some sort of rhythm, if you will, but it's not there yet.
Bob, I want to go back finally to what you said at the end of your last comments, which is like take a little bit of profit. How much exactly are you talking about? I'm just wondering if you can characterize a little bit more how your sentiment is shifting and what you're actually doing here.
Well, I think all of a sudden everyone's talking about gold, for the first time basically in their careers. And so they're coming in and buying hand over fist, trying to engage in a catch-up here. And what I'm saying is that at a minimum, what you should be doing is maybe taking that original 10% of your portfolio, which is now considerably more in gold, and paring that back and rebalancing back. You might even rebalance back to what appears to be the most hated asset in the world today, which is U.S. bonds, which are at more than 10-year lows. And so that's the sort of thing I'd say. Part of the story of being a strategic investor, an effective strategic investor, is not getting over your skis on the thing that's just gone up, and sometimes just taking the opportunity to diversify and moving out of gold and into bonds here is probably the most compelling diversification option that you can do right now.
All right, yumming somebody else's yuck.